Okay.
This meeting is being recorded.
Okay, when we're looking at a SMC, first of all, we have what we call a expansion. Let me use caps. Expansion and retracement. The expansion, let me simplify it. Ne?
So
Expansion occurs when there is an impulsive move towards the direction. And then retracement is the correction after So another word for this, we can say expansion and retracement, we can actually say is an impulse and correction. Yes. Can keep it here. And then what we have here, low, high, high, low, high, 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 low, high, high. So what we can say here, this is our expansion. And then we can say here, this is our retracement. So impulse and correction. Expansion. Retracement. Expansion. And we anticipate the retracement. So what do we have here? We have something that we call uptrend. Something called uptrend, or another word for it, we can say bullish. And then this side, I can say we have our high, We have our low. We have our lower high. We have our lower low. We have our lower high. We have our lower low. Same thing this side. We have our expansion. We have retracement. Then we have expansion again here, which is our impulse. We have correction again, which is a retracement. Then we have again impulse here, which is our expansion. So this is what we call can simply say downtrend, yes. Downtrend, or we can simply say bearish. And then from there, we can go to the market to just look for examples of what we're talking about here.
Remove it from there, or just click that one that you used to do remove remove drawings. Then you'll see remove indicators. Remove indicators is down there. Remove indicators. Yeah.
Okay, 100%.
And drawings. Also drawings. Yeah.
Yes. So we can simply have our example here. We have our high here. We have our low here. We have our higher high, our lower high here. Yes, so
if you click it twice, it go, yeah.
Okay. So just to label things for you, we have our low, our high here.
Our high.
We have our low here. We have our lower high here. We have our lower low here. And then the market continues in a downtrend, giving us a series of high, low, lower, high, lower, low, lower, high, lower, low. Impulsively and correctively. Impulsively and correctively.
Correctly.
We have our lower low here. And then again, we can label our basics of what we're talking about here, which is our expansion, impulse, and
Then
retracement. Yes, retracement, which is our correction. Yeah. Again, here we have our impulse. Correction. Impulse again. Correction. Impulse again. And then this is what we said, it's our downtrend or bearish. And then we can also look for an example of a bullish trend or uptrend. We can look no further because we have a nice trend here.
Yeah, that's why I wanted to say, just use that one there.
Yes. So here we have our low. And then we have our high. And then we have our high low here. And then we have our higher high here. And then again, we have created what? Our higher low here.
But that higher low, that second higher low is confirmed when it breaks the previous higher high.
Yes, because we have broke this previous
higher low. Yeah.
Yes, because we have broke this previous high here. We created a new higher high. So this is our new higher low. So now we're anticipating what? A break of higher high as well.
Yeah, that's what I'm saying. I guess so. On the last one, the last higher high, ne?
Yes.
The last higher high.
Yes.
And then the recent higher low.
Yes, this one.
Yes. So I'm saying on that higher low, it will be confirmed when price breaks the higher high. That it's a higher low.
Oh,
You
yes,
understand?
yes,
It's a
yes. You
higher
are
low.
100.
Yeah,
You are 100% correct. Yes, 100% correct. But already
yeah,
because here we have our low and our high and our high low and our high high. Already this because we broke this previous high to create this new higher high. Already we can confirm that this is an uptrend.
yeah. On the first ones, yes, we can confirm it.
Yes, up
Yeah,
trend or bullish.
or bull. Yeah, that first impulse
Yes,
and that tracement or that correction.
yes. So
Which made a
now,
higher low.
yes. So now what we're gonna have something called Fibonacci. We can say Fibonacci or we can just say Fibonacci retracement tool.
Just write Fib is fine.
Okay, can say
Yeah.
Fibonacci.
Yeah.
So in simple terms, what is Fibonacci? This is used to determine the end of the retracement. We can say usually or most of the time the price retracts to 50% or until 0.62, at most
0.71.
0.71 before another impulsive move occurs. So now we can still use an example of Fib on here. Our Fib, you put it on your higher high and your higher low. I mean your lower low.
Mhm.
And then you look for entry. So this is what we can do here. Our highest point and our lowest point. Let me see if I put it this side where you can see it clearly. Is it fine here or this side? Wait.
Wait. Leave it like that. Go to settings. Ne?
Yes.
Settings for that Fibonacci. Leave it like that. Yeah, and then go to settings. That one is
where should I go to settings?
Put the Fibonacci on the screen. Anyway.
Oh, okay. Here's Fibonacci. Oh, wait.
Yeah, expand it anyway.
Oh, here's Fibonacci.
Expand it.
Yes.
Expand it down. Yeah, okay.
Settings.
Sharp. Then go to settings.
Yes.
Settings there. And then go to style.
To? Oh, style.
Style.
Yes.
Yeah. And then go down. Go down, scroll down, scroll down.
It doesn't scroll down.
Yeah, it is on the left hand side there. Is there?
Oh,
Check. It's grayish.
yes.
Just have to scroll down.
The numbers
You are
are
reducing
scrolling.
the two, not that. No, not the number.
Oh,
The whole template, the whole thing. You scroll down using
oh, the
your
whole.
mouse wheel.
Oh, okay. Let
Yeah,
me
use your
see.
mouse wheel to scroll down.
I'm not even using a
Scroll
mouse.
down.
Yeah.
Well,
Let me see.
on your right, no, don't change anything. On your right side, ne?
Yes.
0.23.
Yeah,
0.23 weapon.
yeah, 0.23.
There is a red, there is a red, there is
Yes.
a red again on the right, and then there is a gray line there. Again,
Yes,
when you go left, when you go right, I mean, right,
yes, I see
the right
red
of
on the right.
0.236.
Yes.
Go right again before the chart,
Oh, I
before
see.
that
Great.
red candle. Yeah, yeah. That's what I'm saying.
Okay.
Then now switch off that background.
Yes.
And then let's go up a bit again. And take 4.23 and take it
4.23. Yes.
and take it and take 3.6
3.6.
and take yeah
Yes. Oh, yes, yes. And then,
and take 2.6 and take 2.6
okay.
and then from there we go. You can use the Fibonacci. You can all
All
see
right.
it.
100%.
You can remove that line also.
This
Go to
line.
settings.
All right. The settings.
Trend line up there.
Is this one?
Yeah, and take it.
Okay. Then I say okay, ne?
Yeah.
100%.
Yeah.
Okay. So now we use our fib. We go to our lowest point all the way to our highest point here.
Yeah.
Yes,
now
and then
it's clear and beautiful.
100%. And then now what do we see according to what we explained here? Something that is used to determine the retracement. Usually the price will retrace to 50% or to 0.62 before another impulsive move occurs. And then
0.61,
our higher low here, what do we have? We have 0.61, which is a sniper entry. And then your TP, your first TP will be your previous high. So we
your
can say
previous
this.
high, yeah.
Yes. Your first TP will be your previous high here. And then your stop loss just below the previous low here. So this is a good trade in a way. We can say this is a good trade in a way.
Well, not really, because looking at the risk to reward, look at the
Oh
risk to
yeah,
reward,
risk,
it's
risk,
1.86.
yeah, risk to reward. Yes,
Because our risk
1.86
reward should be at least 3. So
should be at least,
as much as we have that sniper, that stop loss of obvious will go and make it tight on the smaller time frame.
yes, that's true. And then you say our risk to reward here.
Wabona, that thing is 1.86. Take that
Yes.
red down there, take that red down there and drag it to below 0.618, just below 0.618. You see,
Or just below.
drag it up, yeah, just below the low. Yeah, you see now, you can leave it like that.
Okay.
Now the risk reward is 6.6. Now it's 6.6. It means it's 6% now. You are risking 1 for 6%. You get it?
You are risking one trade for 6%.
One, yeah, whatever it can be, $1, $10 or not, is 1:6. So it means for $10, your TP should be at least $60. You get it? So it's 1 to 6. Risk to reward.
Oh,
So,
okay. It means your
so when
TP
you
will
go
be.
and punch, so when you
Yes.
go and punch the things on your, double click that thing, that green and red.
This
That
one.
green and red. If it's
Double click it.
and settings. Yeah. Then inputs. Go to inputs.
Input.
Then now when you come here, you see the risk where there is it's written risk.
Yeah, I see 25%.
Put it to 1%.
Okay. Let me do this.
You can just type it.
1.
Yeah, 1%. Good.
Mm-hmm.
Then now you see when you go to you can do okay. You can do okay just to change the
Okay.
to. Yeah. So now you can double click it again. When you go to your, you can double click it now. So look at it like this. When you go to your MetaTrader, you see that
Yes.
account size.
Yes, I see.
It will be your account size. So the lot size, it will not tell you the lot size. It will be you who do the lot size. This one doesn't check lot size. It's only
All right.
this one
Yes.
doesn't do the lot size. But then it will show you that the entry price it's 10671. Then profit level, that's your TP. You just go and copy this profit level to your MetaTrader as it is. I want
Oh,
52823. And then
okay.
your stop level, you just go and copy this one, 7990, like this. You can come here
Oh,
and say copy and then go to MetaTrader and paste like
paste.
this.
That's all. Or you just write it manual.
10591. Yeah, you can just go and write it manual. Your stop level is 10590. Then the
Okay.
stop loss, it means that this stop loss, it's if it's 7990 like this,
Mm.
this is 79 pips. This is 79 pips.
Yes. Okay.
Oh,
And then if
so
it's
if it's
like this,
5283 like this, this
528
is
pips or
528 pips. Yeah,
mm.
528 pips.
Okay,
You
I
get
see.
it.
Yeah, I
So
get it.
Tina, what we have to do is to make sure that the stop loss is at least 30 pips.
Oh,
So with
okay,
30
yeah.
pips, you can be able to risk more using the same amount, but risking more. Because if you are risking 70 pips and then now you have a size of 0.01, so let's say that stop loss is 100 rand. So it
Mm-hmm.
means that now if you reduce that stop loss, the same stop loss. Again, now the take profit was 100
Yes.
rand also. Let's say the take profit was 300. Then you
Yes.
reduce that stop loss to 35 pips, which is half of 75. And then you
Yes.
use that 35 pips, that half that you reduce, to enter another position with it. So now you have two positions. So now your take profit is going to be 600. So now your risk to reward is what has increased. That is basically what risk to reward is. What?
Mm. Yeah, I can
Yeah.
understand. I can understand.
So the more you
Mm.
reduce your stop loss, the better for your take profit. So when you reduce your stop loss, it means it must be giving you enough space to enter another trade to give you more risk to reward.
Oh, okay. So now
But
when you
we'll get to
enter,
it. We'll get
yeah, we will get to it. Not because I see you usually do that. I
yeah,
see you entering another position and then
yeah,
you move your under stop loss and then the other one you keep it there. Something
yeah.
like that.
So when you enter, because even here when you enter, you can use them too. Because the same thing, and so you have a low, you have a high, and then you're
Mhm.
expecting it to come back to the, and then your first stop loss obviously it was below the low, right? Your
Yes.
first stop loss when you enter your first trade, let's say you got it on the impulse, you did not wait
Mhm.
for the retracement, so you entered on the low there.
Mm.
So your stop loss will be below the low. Then you have that first impulse which gives you a high. And then now when it comes back for to create that higher low, you are going to get entry number what? number 2, and then your stop loss now will be where? At that higher low, and the
Yes.
stop loss of entry number 2 also will be at where? At that higher low. So that stop loss of the first one will be a profit.
Oh,
So that the
okay.
second one will be, yeah.
Okay.
Because
Okay.
here it's sniper, we don't expect it's candle trading here, it's simply candle. So we can see that the moment the candle gets there, we don't expect to say no, a retracement will do what. If it's a candle, if it closes, it closes. If it goes, it goes. That's one thing I'm
Yeah.
seeing here. It's straight
Yeah, that's
candle,
true.
candle straight.
I understand what you mean. So now if it comes back to your other higher low, already it's your another entry here and your third TP.
Yeah. So what
Oh,
I was saying, is, for example, is you can remove that thing, that red and white,
or
that red where stop
this
loss
one.
and profits. Yeah, you can remove it.
Okay.
Yeah. That one we just have to increase the risk to reward. So what I
Yes.
was saying, DK, on this one, the second one, the higher low and the higher high, the second higher low and higher high,
Yes.
it is exactly what you just said now. I was saying, okay, let's say for example now, there on the higher high and the higher low, it
Yes.
is a downtrend. You understand? No, the second
Yes.
one, the second one.
Oh, this one. This one. Yes. This one.
Yeah,
Yes.
yeah. When it goes down there, it is going down on a downtrend, right?
Yes.
So from the higher high to the higher low, it's a downtrend. So
True.
what I was saying is, yeah. So what I was saying is, now that we have that higher low and we still have that higher high, we have to monitor price. What will happen when the price comes back to the order block of the previous higher high before it breaks out?
Oh, yes. True. Yes.
To say that the trend is going to continue with the uptrend, and
Mm-hmm.
so the trend it can reverse.
True. Trend can reverse. That's true. Like
Yeah,
what I'm seeing here.
yeah.
So far, it
So
respected this order block here.
yeah, good. Exactly. That's what I was saying. No, this is very good. This is very good. That's what I was saying. No, it's
Yes.
very good.
And then